So the main story is dollar strength with the potential appointment of Walsh. We'll look at a moment what tradable opportunity we can take from that. Apple shares extending, so that keeps sentiment positive. Then looking ahead, the data, got a whole swathe of European data. None of it's important at the moment, right? So all that data is just not in the market's focus. Neither is Canadian GDP, neither is the US
Next on
PPI.
schedule in just under 10 minutes time, do get the flash growth data for Q4 from the Eurozone. The quarter-over-quarter figure that's seen at 0.2 from 0.3, the year-over-year at 1.2 from 1.4. So as what we've seen this morning, the German metrics did come in firmer than expected. The Spanish figures are a little mixed. The year-over-year softer, while the quarter-over-quarter was firmer, while the French data was softer on both the quarter-over-quarter and
I'll just turn the squawk off for now. So we've got some Fed speakers, Muslim Bowman, and we've got Mirren coming up as well later in the US session. So Fed speak could move markets. Mirren is more dovish, so we know Mirren dissented and wanted a vote cut, so that's no surprise. Then we've got Bowman, Muslim. So nothing massive on the agenda for today. And we've had the major earnings. So the main risk for today is US President Trump saying something, political news, either something on Iran, which could boost oil prices further, or if we have some progress in the Russia-Ukraine conflict, that could boost sentiment. The other thing that we're seeing is significant falls in gold and silver, right? Now, we'll go and look at some of those levels we were looking at yesterday, and we'll just go through some of the technicals. But for today, what do we have? We have a bias for dollar upside. Now, don't forget, one of the other features that we have here is this daily brief. So if you look at the daily brief here, you get another aspect of the market from another analyst, right? So very helpful. Professional analysts read other analysts, right? For a reason. So do make use of this. Come and have a look at it. Look at the levels. You can maybe use some of the technical skills that I'm sharing with you here about how to trade it, right? Okay. Lots of decent ideas, lots of decent levels for you to look at. Okay. So don't forget that we have that daily brief. Chap called Ryan, we worked together a number of years ago when we were working at what used to be called FOREX Live, which is now called Investing Live. Excellent analyst, been involved in the markets for years and years and years. So, really good that we've got his analysis here for us. Now, so what we're looking for is at some point, Trump's going to announce Walsh by the most likely outcome, right? So that's supporting the dollar. So the dollar should be supported into that announcement. Whether it keeps going, the dollar needs something a bit more tangible. It needs some data to really allow it to retrace. It could be this announcement for Walsh. We're waiting for a retracement, or it could be ADP jobs or non-farm payroll next week. Okay, so we're in a kind of a quagmire. We haven't got any significant data. There's not a lot going on. So which way is the dollar going to go? It needs something to really change the outlook. So what we can do is just looking at the euro dollar. So first of all, trade management from anyone who got into the euro dollar short here, right? From that level yesterday, that 11970 level, right? So when that went, if you were in that and it went down and you got that 20 points, 25 points, you would have taken profit, right? Did anyone get into this? Taken profit when it was like 20, 30 points, leave the rest at break even. Did anyone manage anything on that euro dollar short zone that we were looking at yesterday here? That was like a decent. Yeah, nice, good man. I'll look at dollar Swiss. I was in the dollar Swiss franc long. I'll show you how I played that. Yeah, good man, TM. Right. So now the next level for today is 11950. Same again, right? Just like a 5 point stop. If we get up to the 50, take it out. Now, another area you could consider is obviously this level here. Look, you've got ding, ding. you could consider that level there. I prefer this level, but this level would be valid too. Okay. And it's a 5 point stop only, hit 20 points, right? Move it to break even. And that's based on that dollar strength story. You see the sentiment's dollar strength, so you're looking for dollar strength. Now, if you were like really clever with this, when you read the sentiment, you could have gone and said, well, hang on, look, let me find the first opportunity where I can find some dollar strength. Right? So you could have said, okay, there's a little trend line. I'll try this. You go, look, the first opportunity that I get, I could try a little break like that. Do you see? So don't be like limited purely by my levels. So it's not like I'm not the magic man, who has these magic levels. It's just using common sense. Oh, nice one. See, there we go. TM, good man. You've got the idea. So do you see what I mean? You go to the session. What am I seeing? Go to the session. I read the analysis. I'm seeing dollar strength, right? On this. Look at the currencies. Oh, look, dollar strengthening. Get into it. So you could look across lots of dollar pairs. Now, the beauty of the euro dollar is that the spread is so small and it's such a liquid movement and it's a very trending pair. See, the reason this strategy works is because you're getting in on something that moves. That's why it works. So if you look at the FTSE 100, this was a trade I was in yesterday, looking for a breakout. I don't know if anyone got this, FTSE 100. I was looking for a breakout of this this very bad symmetrical triangle pattern. Now, technically, it's not great, that doesn't look right, but you can see here, right? I entered in on the break of this high, right? So I was triggered in, right? Stopped 10 points, fine. I took 20 points, moved it to break even, and then was stopped out at break even. Okay, so nice. See, the beauty of this is if you can't always tell, like, what was sentiment? It was broadly positive, right? In some ways, there wasn't like anything to say, oh, stocks are definitely going to sell off. So if you did break out, you're in a great position. And then, another times, you get a breakout and you get a move like this, right? And you're up. And you can get some really big winners. So that was a nice trade in the sense that you had the opportunity to break out. But you notice, look, see, the beauty of this is if you'd entered going for a symmetrical triangle pattern, right? You might say, okay, I'll leave my stop that side, right? And you're sort of barely in profit, and then I've got faked out. What do? Oh, I'll sit through it. You see, you haven't got any of that dilemma with the method that I'm sharing with you here. And there's lots and lots of technical ways of doing this. So volatility is rising, and that Wallen news should keep stocks pressured for now. Okay, so keep that in mind. Looking at precious metals. Now, if you remember yesterday, I don't know if you remember, I said, look, the other way is got spot gold lower. I said on a breakout would be great, but I said, but I don't want to do it because there's so many bids being bought. Looking back with this strategy, it doesn't matter because okay, if it's bought, you lose once, right? You can have that could have been a $7 stop, and then you're getting sort of 20, 30, 40 to 1, right? Even 50 to 1 on it. So today, right, gold, any retracement back up to that 5,100 level, $7 stop, suitable for shorting. Try up to 3 times. So if you get stopped out, try again. Right? You hit about $20, $25, take something off, stroke move it to break even. So again, yesterday, looking at the sentiment, we were looking for dollar Swiss franc upside. Remember, we looked at this level, try up to 3 times from this level, 20-point break even and take 50% off, right? So I tried to get in this a couple of times, right? Stopped out, moved up, closed. Structurally, just made sense for me to move to break even, on one attempt. Where was it? Had a nice, there was a nice structural reason to move to break. Oh, here it was. Yeah, so I broke out here, right? Moved to break even, right? Got stopped out of break even. And then when we had that larger move yesterday, I got in as it came back up through the level. I was like, oh yeah, this there was that dollar strength. Remember that surge yesterday afternoon? Got into that, moved it to break even when I was about 20, 30 points up, right? Moved it to break it up because I was remember what I was looking for yesterday? I'm looking for the dollar to retrace. And we had a Harami inside bar. We've now got another Harami inside bar. So this is now coiling price action, right? This is calling. That's it, TM. Exactly, right? So I was in that dollar Swiss franc. I tried to go, I was trying to go for the breakout of the Harami inside bar and the retracement back up to that level. Um, so again, that is still valid. Now, technically, coiling, coiling, coiling. When price coils, it then explodes. That's the kind of pressure that's going on. So that's what you're trying to take advantage of. The problem is dollar Swiss franc is a bit trickier than than the euro dollar. But yeah, yeah, it didn't move. It didn't move as much. And I've got that in the back of my mind. It's a bit slow. And but technically, right, another way today would be going with a break of that trend line here. A break of this trend line, 5 point stop, and seeing what you're trying to do, you're trying to get into this and look at the yield spread. Yield spread's going up, so that wants to go up, right? Um, so a low risk, high reward place to enter is here. My preference over the pairs is always going to be euro dollar, right? Over the dollar Swiss franc. So what have you got here? You got Harami inside bar, Harami inside bar, Harami inside bar. This is trying to break lower. You got this kind of trend line here that's breaking. So you got this. So, a very decent level here is there. And actually, that is superior, is a retracement to 11923. Yeah, 11923 with a 5 point stop. Let's just see, actually, just the bottom of this, just the bottom here, right? Now that is an inside bar down pattern. So this becomes resistance technically here at the 1914. But like anything up to there, right, is suitable. Yeah. So 11950 is legitimate. That's probably the better, you know, your technical dream entry is the 11923 because you're looking at the potential early break of this coiling action. Let's just see. You see, you got that's a Harami inside bar. Very, very constrained. Yeah, 1A, I think is fine. I think you could even make a case for 1-4. Um, or you could go back right back up to that level. I don't think you'd get there and go 4-4. So 50 is probably your dream area. So, 50 is if you get, that's kind of okay, you're well cleared out of everything. So I like the 50. But Najam's 118 is absolutely fine as well. Very similar logic. You're just taking out these lows. It's just a bit busy in terms of support. That's the only problem. Um, and remember what you're trying to get into, and you're trying to get into dollar strength here. Now, here's the risk. This is impulsive to the upside. So the dollar may not be bid. You might get the Walsh appointment, and then the dollar sells off as markets go. "Hmm, still want to sell the dollar." And then this becomes very explosive for a potential retest of the upside 1.2050. So there's a potential for two-way here. So if you were like very savvy, right? The ideal is like if you go above 1950, you go long. You stay below 1950, you stay short. So really, what I'm really saying is that this is your line in the sand, right? Stay above, then go with the longs. Stay below, then go with the shorts, right? And that's kind of your way. So you could equally have this, and Mark, if you're around here, see, this is the ideal world. What you want is you want to be able to go, there's a short potential position there, but you also want to be able to have like to set a long position at the same time, right? So if you get stopped out there, then you could potentially look for a longs. Now, if you get some sentiment that's, very negative for the dollar, then you know straight away I go through this level, right? I can have absolute minimum risk. Yeah, nice, Mark. That's sort of what you want, right? You want to be able to straddle that. So like maybe it's so when this one gets point stopped out, then you're long. And you try like don't try it indefinitely. Don't try like I've been here for 20 times, I've, I've lost 50 points trying this 20 times. Just give it 3 or 4 times, and okay, you got to know when to cut it. But then what you're looking for, and when you see, yeah, that's it, TM, right? So you got to use a little bit of savvy sense here. And like before the data's coming out, like the dollar Swiss franc, I wanted to be at break even before the initial jobless data. But the euro dollar, I was happy to leave in. And I got triggered in on that date on the initial jobless data because I knew it's not really that important and it might just give you a little bit of liquidity. So there are finer points, but the bottom line is just finding those areas and see this is compulsive price. And as we've looked at before, look, there's a nice three inside bar up pattern. Not a nearly in three inside bar up pattern. But this is either going to be an inside bar down pattern and we're going to carry lower, or it's going to be a false break, and then you've got a false break of a Harami inside bar. Do you see? So this area, the market's trying to decide, do we want to break down lower and head lower, or do you want to push up higher? And by being like 5 points either way at that level there, right, at some point you're going to get into, a 50, 30, 50, 60, 70 point move. Right. And then that makes up for your losses of the 5 points. But you're not then having to put a macro position on, oh, I've got 200, 300, 400 point stop. Don't do that. It doesn't work longer term. And you're going to have the stress of, oh my goodness, has the sentiment changed? Oh, I've got to take a 400 point loss. You see? But you can use the macros sensibly, but technically have your head screwed on, right? So that you know exactly where you're getting out and exactly where you're getting in. I hope that helps. It's been a little bit of a technical lesson today, but I do hope that is useful. And weekly, obviously, what we're looking at here, if he closes underneath that level, then like as a false break of this level, we're looking to go lower. So you see, we're sat at a technical crossroads here. Um, all right. So looking through the calendar, there's really not a lot going on today. So what it is, have the news squawk on in case there's any news. Um, there's nothing going on. Look, Ministry of no currency intervention, right? Happened at all. So it was all speculation that move in the dollar yen. Because the US weren't acting, and neither was the Ministry of Finance. That's who makes the intervention. It's not the Bank of Japan, it's the Ministry of Finance, right? So no intervention, that recent yen strength. Um, Inflation out of Japan was a little bit lower overnight. So that supports dollar strength, yen weakness. Um, so, what would you expect today? You'd expect dollar yen upside. If you're going for that, where's a technical savvy area? So that was that nice short we got. Nice 40, 50 to 1 win of that. So again, Harami inside bar, Harami inside bar. Let's see. What have we got here? Right, so your dollar yen long would be this. And the intervention risk is going to be much lower now. 5 point stop at this level here at the 15391. Does that make sense, everyone? Is everyone beginning to get this? Yeah. If like you're struggling or thinking, what do I do? Focus on the euro dollar. Focus on the euro dollar pair. So if you're like, okay, I'm going to look at the euro dollar pair and pick my one level, and that's it. Because, you know, you've only got to get like a few trades. And it could be like, and also use your sort of common sense for want of a better word. Like as you're going through the session and say like this forms a little range here, like that, and then you've got the US Open, then you might say, well, look, do you know what? The 11894 will be the level. Or say this forms another little range. You might think, well, I'll bring it down and I'll try 11942. Do you see for people who are on a liquidity hunting stops? And because you're only risking 5 points, big deal. But don't try over and over and over again, right? Okay, try two or three, pick your level two or three times and leave it. And then think, okay, my maximum risk for the today on that instrument is 15 points. Folks, have a very good weekend. And I look forward to seeing you. I am scheduled to be back here next week and for next month. And Najim, look forward to seeing you later. Great, you can make it. Mark, TM, yeah, well done on that euro, dollar, dollar, Swiss franc. Great work. And yeah, so yeah, see you later, mate. Cheers now. Bye.